Alrighty, traders, good afternoon, good evening, good morning, and welcome to the AAA session. Sorry, I just realized I didn't have my mic up, so I had to get that set up right here. Hi, my name is Gary Fichardt, Director of Trading here at Market Traders, and glad to have everyone here. For those that have just returned from the new year, hopefully you guys had a fantastic time. We're back again. I've got the panel, of course, Chris Pulver and Tyson Clayton. We're going to be talking about market setups and trading opportunities. We're going to speak about a whole bunch. We know that cryptos have been moving as well. We've had a big correction over the last 24 hours. We're going to talk a little bit about that as well. We've got news coming up. We've got, of course, possible impeachment for President Trump, which we don't think is going to happen, but it is out there. We're going to look at also how the market's set up as we're heading into the inauguration on the 20th of January. And we're going to talk about that as well and how the market's reacting. Dollar be moving as well. We're getting a bit of a power push on the dollar. We're seeing stock market being a little bit down. Dow Jones is down today. We'll see if we have any pushback since this morning's open. We'll talk about that as well. So a lot to chat about. I'm going to go ahead and introduce the panel for today, which is Chris and it is Tyson. Now, just a reminder for those that don't know, we do have a chat box available right here. It looks like someone's already got their cup of coffee and an ice cream. I'm not sure what that's all about. But we're all set, ready to rock and roll right here. And let's go ahead and get started. Chris, I want to first go ahead and say welcome, Chris and Tyson. How you guys doing? Chris, your mic is muted. There we go.
Yeah, I'll blame Gary. Gary always likes to mute me. He says I talk too long. No, I was going to say, hey, happy Monday, everybody. Nice to be back. Just finished our first full week of trading last week. We've been chatting for the last 20 minutes leading up to the session. We have a ton of great stuff to talk about today. So really jazzed to be here today and looking forward to a great week.
Yeah, I second that. I second that. And another thing I want to make sure we talk about is the importance of, and Gary, we always talk about this, but it's the importance of technicals. Last week's jobs report shows how fundamentals play a role. But, if I look at that number that came out on Friday, I would think, the dollar is going to continue to get destroyed. Well, wait a minute. It was already priced in as we were talking last week. And the number was really bad, but the dollar seems to be catching a little bit of a bid because the technicals say it's time to rally. So we want to talk about that today, too.
Absolutely, and we have been talking about the dollar and how the dollar is set up and exactly where it's at based on the five-wave structure that we spoke about last week. So we're going to follow up on that conversation. So let's go ahead and open up the conversation today. And I want to go ahead and pull Tyson in here because I know, Tyson, you're a big crypto fan right here. And what's going on with the cryptos at the moment right now? So Bitcoin hit highs. Ethereum hasn't taken out the 2007 high, but we certainly came very close to testing it. But we've had a big, strong pullback over the last 24 hours. Do you have any insight on that?
Yeah, I'm loving the pullback. I'm on the record. We'll stay on the record. I'm a Bitcoin $1 million type of guy. I believe it's built and made to go to $1 million. I think it's going there by 2030, 2032. So phenomenal upside long term. However, it's pretty substantially above its mining cost. Right now, the mining cost is about $16,000. Now that's been creeping up. But historically, when we get up, 2-3 times above its mining cost, which it is right now, or it was, we see a flush back down towards that mining cost. And so I welcome this sell-off. I think that there's more to come. It's a little bit of a game that's being played, though, because here's what I'm kind of doing. Do I want to continue to try to trip over pennies in pursuit of dollars, right? So long term, I think we're going to $1 million. Do I want to get out of my positions or go into something, cash or something safer to try to buy at 20 or 25,000? And if we get down there, great, I look like a genius. But if we don't, do I miss that next big run higher? Sure. I think the way you can do it is you can kind of be smart about it, maybe sell half of your position or go into half of your position into maybe a stable coin, keep half of your position. It's kind of what I did in the crypto sessions today. I went into something that is a little bit more safe than Bitcoin and then Ethereum. It's a coin called Basic Attention. BAT coin is what it is, and it has a tendency to be a little bit more stable. If the market falls, it's going to fall too, but it has a tendency to be a little bit more stable than Bitcoin. So I'm hoping if the market continues to fall, which I think it will, I think we'll find a floor of support right around 20 to 25,000. So it's got a decent amount to go on the downside. At that point, I want to go out take away from my basic attention, start getting back into Bitcoin, and then we'll have that next big rally high. I think we're going to hit 157 before the end of 2021, Gary.
So quick question on that. I'm sure Chris has got his own question.
That's
quick question on that.
Which would mean Ethereum probably 3,000 to 4,000.
Yeah. So a quick question on that. We haven't really seen a lot of the altcoins moving as much as we've seen Bitcoin. Ethereum has moved, but we haven't seen the other altcoins moving. Is it going to be a time where the altcoins are actually going to start blowing up? Because I think that's a good investment right now, buying in on these altcoins that are really low at the moment right now. So if we're going to see some sort of correction that we've seen right now, isn't it better rather to keep your positions in Bitcoin and Ethereum, hold those positions, but then start adding and start buying in on those altcoins that ultimately could blow up and you get much bigger returns on your altcoins than you will on Bitcoin at this point?
So I agree 100%, but I kind of flip it a little bit. I think altcoins are going to stabilize because they haven't had quite the pump that Bitcoin and Ethereum have, or even Litecoin. They're going to stay somewhat stable. Again, let's say Bitcoin loses 30% from current value. Altcoins could lose 15% or 20%, but relatively speaking, you're not losing as much as you would in Bitcoin. And then what I think will happen is I think you'll see a lot of talking heads on TV saying, oh, this is the time to buy. This is the dip you've been looking for. I think we see another flood of retail investors getting involved. And I think they're going to go after those cheaper ways to get involved in crypto, or those less expensive ways. And that's when the altcoin market's going to start to pump. Same thing happened in 2017. Bitcoin went on it doubled from like 2,000 to like 4,000 as Ripple and a lot of these other coins stayed still. They kind of stayed around that 20, 25 cent level. Let's say Ripple as an example. And then it pulled back. Bitcoin then pulls back to like 3,000 and goes from 4 to 3,000. And Ripple stayed still. And then that next big explosion, Bitcoin goes from 3,000 to 19,000, but Ripple went from 20 cents to $3.40. So the return was so much more. So I guess the bottom line is I see the altcoins going down also, but not as much as Bitcoin or Ethereum. And then in the next big move higher, I think the altcoins are going to lead it.
Chris, what is your 2 cents on this?
Yeah, so I did take some action last week. I was up around 900% in my Bitcoin position. I was up around 800% in my Ethereum position. So I decided to park a little bit of that profit into my cash. So my USD wallet, I use Coinbase. So I parked a little bit of that in my USD wallet. I'm happy to see that this is happening. I'm happy that I kind of, got out near the highs, but at the same token, it's like I couldn't just close out everything. I don't think that these runs are over. I don't think that long term that this is it. I mean, everyone right now, I'm seeing headlines like, it's the bubble. I told you, Bitcoin's worthless. It's like, look, everybody wants to enjoy this move and nobody wants it to go against them. So over the last week, in the last 48 hours, when we've seen, the tops at 42,000, then it dips to 31,000, people are now like, oh my God, it is a bubble. And they're freaking out. It's like, look, the market moves in waves. I think that truly the cryptocurrency market is a lot like Forex was 20 years ago. We have crazy trends, a lot of volatility, but it still moves and finds pivots and targets and pockets, supply and demand. It finds wave cycles, Fibonacci levels. Like, there's still a lot of technical behavior in the crypto markets, but it's just moving really fast. And so I think right now it's like nobody wanted to miss out. And so they dump all this money in, late last year during the holidays now, and they see it go against them. And it's like all the talking heads are showing bubble. Look, it's a wave cycle. It should be a correction. We can't go from $10,000 to $42,000 without having something, a correction, profit taking, a dip, a breath, anything. So it makes sense. And it's like, yeah, it's violent. It happens to be, on the weekend when not a lot of traders, investors are really paying that close attention until it makes major news when the markets open back up Sunday and Monday. But look, I'm happy. I'm happy that I parked a little bit of cash. I'm waiting to see, just like Tyson said, another flush lower. Look, I'd love to see Bitcoin come down to 20 or less and start looking to maybe add more to Bitcoin. I'm, back in Ripple again. I took some partial profits on Ripple with the SEC probe. I'm back in Ripple. I'm in Link. I'm liking the basic attention token like Tyson's talking about. So, I mean, look, if you're wanting some crypto knowledge, like Tyson has an amazing portfolio put together for traders in the Ultimate Cryptocurrency course. So that series, like that portfolio is awesome. And it's what is it now? Like 8 coins, Tyson?
Yeah.
Kind of portfolio weight of like 8 coins. That's awesome. So and again, it is speculation. It's risk trading. I mean, I know this is my personal 2 cents, but I know that I am prepared for everything I've invested in cryptos to go to zero. I am willing to take that risk. Now that sucks because that obviously is not what I wanted to do. But right now it's not 0%. It's up, 7, 8, like 900%. So I'm really happy that I decided to get involved. And I hope this, call it a hedge, call it inflation protection, like something is driving these prices. And we have, dollar at 3-year lows that's just now starting to show some technical signs of correction. But it's like we've got great technicals on the dollar pairs for some short-term corrections. We're talking about all these things that fundamentally and technically could help fuel and galvanize a sell-off in the stock market, drive some volatility higher. And cryptos are now looked at as like it's a bit of a hedge. Like gold, silver performed very well last year. Cryptocurrencies performed very well last year. It's just another avenue. It's another vehicle, but it's still risk management. I think what's exciting about cryptos is the amount of money that could be made on them is like, it's baffling. I mean, you're talking about a finite amount that's like, look, I'm willing to part with X amount of dollars, but if I am right, if we are even remotely right at Bitcoin at 100,000 or 500,000 or $1 million, like that downside risk is nothing compared to the upside potential. And that's why we're in it.
Yeah.
That's why we're in it. Yeah.
That's been my whole argument since 2016 is, okay, might go to zero. My risk when it was 2,000, my risk is 2,000. My reward is, well, I think you could maybe go to $1 million. Okay. It's at 8,000. Is it still overvalued, Tyson? Well, your risk is 8,000. Your reward is this. And it's still the same. It's 30,000. Is it still overvalued?
Yeah.
Your risk is 30,000. You don't have to buy a full Bitcoin, but if you just take it one for one, I believe your risk is 30,000. And even if you take, let's say you think Tyson's a dummy, which that's okay, but you take these really, really smart people out there with a lot of money. We've got Guggenheim and Citibank and all these companies coming out with saying 300,000, 350,000, 400,000. So let's say 350,000. Okay, you got $30,000 worth of risk. You've got $300,000 worth of reward. That's a 10-to-1 risk versus reward. Guys, that's phenomenal. Also, I think you're so right on, you have to think maybe this goes to zero, maybe it goes to nothing. I think it's already established where the zero idea is out. I don't think that's a reality, but let's say it is. I think some of these institutions think it's potentially a reality, but it's the same way they look at buying portfolio insurance. Same way you and I look at buying our house insurance. I don't ever expect to have to cash in on my homeowner's insurance, because if I do, something catastrophic just happened, right? I expect to pay my homeowner's insurance every single year and lose that money just because I'm going to have that protection. I think people are looking at Bitcoin as kind of the way to insure their portfolios, but have something that doesn't completely lose value, which I actually, you think of it that way, it's maybe the perfect portfolio kind of hedge or portfolio protection. And as I say that, it's kind of trading correlated with the stock market down, Bitcoin down, but that correlation is not the same long-term, guys. Do not think that if the markets go down, Bitcoin goes down. Right. There's not really a correlation there. So I look at it as a great way to hedge your portfolio, a great way to say, man, if these people with, tinfoil hats are right ever someday, then you know what, this might take control. It's one of those things, but you got to experience it. I think somebody could invest today and you could be down 50% in the next 3 weeks. You got to be prepared for that.
I agree, and you know what, the way I look at it is I call crypto as my lotto ticket, because how much money you spend on lotto tickets every single week, every single month, and if you take $200-300 that you spend on lotto tickets, I don't know, maybe I'm just only the one spending so much money on it, but if you take that amount of money and you put that into cryptos, and it does do what Tyson says, man, I'll tell you something, it's going to be, you're going to build up. If I build up 1,500 coins that go from 20 or 30 cents to 1,000, I mean, that's $1.5 million that you can have from holding on to some cryptos. So I say put in 20, 30, 40, maybe $300 a month. Just add it and buy these different altcoins that could really go high. Keep adding to the dips, and eventually you're going to have quite a bit of money invested in these cryptos that, just like I said, I would have paid this out to, I don't know how many times I've bought a lot of tickets. I haven't even got one freaking number, not even one number. So, if I get 1 cent back from these from the cryptos, I guess I'm making more money than I am on the lotto tickets.
Last thing I'll say about this, Gary, and you just hit it on the head, is I don't know of another asset class that has the potential, no guarantee, potential to turn $10,000 into $1 million. There's not another asset class or investment that I could find right now that has that ability over the next 3 to 5 years. And crypto has that potential. Now, is there a guarantee? Absolutely not, but it could happen.
Yep. No, absolutely. You can, and by the way, just answer a question right here from Juan. You can actually move your crypto. You can go ahead and transfer or convert from one crypto to another crypto, and won't cost you any fees. But if you go ahead and put it into cash and then you transfer back out of cash, there will be fees on that transaction. But you can do it. You can do transfer from a crypto to from an altcoin to an altcoin, and not actually be charged fees on that. I know that I've done it a few times.
Instead of going to cash, there's Diacoin, DIA, which is kind of a stable coin. It's done a very good job of kind of pegging the dollar, and that has zero fees on a platform like Coinbase. So instead of going back into the dollar, you can actually go into DIA coin, which actually pays, I think it's like almost 3% if you just hold in DIA. It's a higher annual rate than what your bank's going to give you anyway. So there's ways to do it where you don't have to pay a bunch of fees also.
Great. That's a great one right there. DIA, right?
DIA, yep, it's a good stable coin that has actually a nice track record of tracking the dollar.
Perfect. All right, good. Let's switch over a little bit now and talk about the dollar, right? We've seen a little bit of movement in the dollar. I'm going to go ahead and open up a chart right here. Here we have the dollar index open up here. We spoke about this last week. We did a bit of a wave count on this. We noticed that we were at the fifth wave. We're anticipating price to move back up again. We're starting to see the upside move. We've seen the divergence here with the oscillator as well. So we're getting divergence, we're getting wave structure that's completing the fifth wave move. Chris, what is your views on dollar index?
Yeah, so we have dollar index. We also have DXY. The DXY actually showed a pretty strong break of the trend line. The dollar index is right there at the trend line. So I think that, this is one of those times where the dollar index lines up beautifully with all of I'd say the only outlier would be the dollar yen. Now the dollar yen's come from the lows at like 102.60. It's up above 104. So it's clearly moving along with the dollar index, but it's like these alignments of multiple missed targets, a yearly pivot, a 3-year downtrend essentially, or a 3-year low in the dollar, oversold conditions, overbought conditions, extremes, divergence. Like technically speaking, this is why we started the year off last week in this session saying, look, we may not be right on this exact top or bottom, but there is a time and a place to see that these are when things start to line up. And, last week's I ran a session on non-farm payroll, and I said, I don't care what the news really says today. I know that we had a terrible job number and our unemployment was like slightly better. Our average earnings were way better, but it's like all that news right now doesn't really make any sense as we're still trying to recover from all the jobs lost during the pandemic last year. So technically speaking, we're looking for a reason for dollar strength. What I'm really thinking and what I'm really seeing on the charts is dollar strength from the technicals also translates into a little bit more of a risk-off tone. And that's why we're talking about the next 9 days being a really significant time to maybe see some risk-off trading and the dollar index breaking trend lines. There are plenty of really simple conservative levels that the dollar can retrace, it can correct towards, and it doesn't have to be a big move. So, dollar index, Gary, the way I'm looking at that chart, I would be pretty happy to see the dollar index get back to like 11,900. Anything higher than that to me would be great, but that's a very safe conservative level. We should come back to the yearly pivot and those previous highs from October last year, which are around 12,100, which you have highlighted right there on your chart. So there are fantastic levels. I know that with our 5-wave sequence, we're typically looking for like a 3-wave correction. So if we're starting this low, we're looking for like a 1, 2, 3 or an ABC correction. And again, I'm watching that price action very carefully because if we're not exactly spot on with that recent low from last week, maybe it comes back and retests it. Maybe it comes back and test the backside of the trend line, right? Just like Gary's drawn on the chart. So if it comes back and retests the backside of the trend line or retest the lows for a double bottom or equal lows, I love that structure. And the confirmation on the right side of the trend line gives me a lot better trade to, start working these little positions and favor buying the dollar. So personally, so you guys know we talked about this last week, I am short Aussie dollar, I'm short Euro dollar, I'm short New Zealand dollar, I'm long dollar Swiss. Those are my 4 right now that currently are up, several hundred pips between them. And I'm letting them run a little bit longer until I see some of those previous lows getting tested, previous highs getting tested. It's simple structure. I mean, the Aussie dollar rallied over 2,000 pips. I'm looking at a safe 200 to 300 pip correction. That's nothing. Like 2,000 pips of bullishness to a 300 pip correction is tiny. So I think that it's very much in the cards for what this Aussie dollar can do and what these other dollar pairs can do, and the dollar index aligns beautifully with them.
Tyson, any currency pair that's trading against the dollar right now that I know possibly is going to be Aussie US dollar? You'll be hanging on to that trade for a while. Is anything else? Is the Aussie dollar still something that you're holding on to?
Well, unfortunately, thanks for reminding me of that thing. So someday, one of these days, right? One of these days, it'll look good. No, actually, what's kind of crazy is today we're getting some very interesting movements in the dollar index, and we said last week. I think one of the strategies, and Chris and I were talking about this right before the session. One of the strategies traders can use is, for example, let's say we think the dollar is going to rally. One of the confirmations you can wait for is wait for a daily close above a prior week's high if you're going to buy something. Or on the downside, like in the Aussie dollar, euro dollar, pound dollar, if you want to sell those, wait for a daily close below a prior week's low. Well, the dollar index as a whole is actually possibly going to close today above last week's high. That's interesting. In fact, that's very interesting. If we go back, we haven't had that happen. Guys, check this out. I'm going back. That has not happened since the week of September 24th.
Yep.
The week of September 24th is the last time the dollar has had I guess that'd be a weekly close higher, but essentially a weekly close higher. Actually, in fact, any daily close higher since September 22nd is the last daily close higher above a weekly high, if that makes sense. And we could potentially see that today, which means, and again, it doesn't mean the dollar is just going to skyrocket, but that's the first signal we need to have to say, oh, okay, maybe the bears are getting exhausted and maybe the bulls are starting to step in. So I love this. If we get a close above that 11,706 level on the dollar index, and then we can start to get confirmations on pairs like the dollar CAD long, dollar Swiss long, Aussie dollar short. I love all of those trades. Just don't over leverage. Make sure you get the confirmations. And like Chris said, it's not like we're looking for the moon. I see 300, 400, 500 pip moves in these, but those are after massive, almost 1,000+ pip moves. So to expect, 300 to 500 pips, I think is well within the cards.
Yeah, and you can go, if we go to the chart right here, just to go ahead and recap, just a short recap, take a look at the dailies on all the US pairs. This is the US dollar CAD right here. We spoke about a bottom right about here. That was priced at, let's see here, that was priced at around about 126.40. Market bounced off that and is looking to rally. So if you're a person that'd like to write down numbers, write down these numbers. US dollar CAD, and this is my own. This is just my own 2 cents on anticipating the price move. We're looking at a bounce of 126.40, which is really bounced off, and we're chasing after a high at 134.27. So I'm targeting 124.37. Let's go to another currency pair, the Aussie that Chris is in. Aussie right here. We're looking at Aussie coming off that fifth wave as well, right here at about 7,800. It's turned, and we're looking for it to drop back to a price of 0.70. So 0.7 is the target to the downside of the Aussie US dollar. Let's take a look at Euro US dollar. I think Chris mentioned Euro US dollar.
Gary, dollar Swiss is my favorite, and I love what's happening today. And I can just kind of I think the dollar Swiss, I'm probably going to be going into some additional positions if today closes above 88, 84. That's last week's high. If we get the daily close above that, that's the confirmation that I need. And I see a push in the dollar Swiss. I actually see a push all year long to 2020 high. So I think the dollar Swiss has quite a bit of room to run. But on this first run, I think we could see 93 in this. We're not going to get up there in a straight line. There's some levels that we're going to have to get through and going to struggle getting through. But I see right around 93. If we can close above that level today, that could be the start of that push up over the course of the next few weeks up to that 93 level.
The one thing about the dollar index compared to the euro, the dollar Swiss moves twice as fast as the euro dollar, but then the difference is the pip value for the dollar is 2 times more than what the Swiss is. So it's like I used to trade both of those pairs back about 15, 20 years ago, and that was the one thing that was frustrating. I wish the US dollar Swiss was actually the pip value was a lot higher, because it would make it a lot more worth trading that particular pair. But that's the reason why I moved away from the US dollar Swiss. But on your point there, this is the euro US dollar right here. Also finishing the fifth wave, looking for price to move from 123 down to about 116, and then to go to the
very similar pattern too, Gary. If you look, the weekly low last week is sitting at, and I keep mentioning these. Those are the kind of the lines in the sand. We get it close below 21.92 today on the euro dollar. I think that's a phenomenal place to start looking to enter. I actually think. I want you guys' opinion on this. Let's just look at the euro dollar for example. If we get it close below 21.93. Looking to execute some shorts with a stop above last week's high and a target of probably at least 2 to 3 times whatever that pip risk is. What do you guys think of that?
Well, I'm already.
Go ahead, Gary. Go ahead.
I was going to say I just want to reconfirm. I'm actually already selling on euro US dollar, and we got stops above the U-turn, just like you said, Tyson. And we're chasing after. We're going to be taking profit as we move down based on risk reward ratios. But we're going to be bearish on this particular pair all the way down until it takes out the lows right here around about 116.
Okay, so that's pretty much what I was, because we got about, right now, it would be about 180 pips worth of risk. So we'd be looking for probably 400, 500 pips worth of reward. So and that would take us down towards those lows that you're looking at.
Yep. Chris, you were going to say?
Yeah, so when I talked about this one last week in my trading room, we got a pretty good entry on this one around 22.75. And I said, look, I'm willing to take a small trade here at 22.75, potentially take it up to 2,500. So I've already positioned in that little wiggle room of I'll still take this up towards the 2018 highs around 25.50 with 2 small like tester trades. Now the fact that we've broken the trend line, I think any pullback towards like 2,200. I mean, if we retest the highs at 2,300, I'm probably going to start sprinkling in positions to build off the backside of the trend line and stay short with a bearish bias until we at least hit 1.20. So I think that, Gary, I love the fact that Gary's looking at 117, 116. I think if I can build some positions right now off the right side of the trend line, I'm probably going to start protecting a little bit earlier, maybe closing partial positions, using some of those, some FIFO loopholes where I can close out some positions with different trade sizes around 1.20 and then let some remainders run risk-free towards 1.17, 1.16. But I've said from day one of this year, I'm just looking for trend line confirmation, and we have it. We've got the daily close today that looks like it's below last week's weekly candle, and it's now time for me to start looking at, okay, I've got one position in right now. I'm looking at probably building 1 to 2 more easily around this trend line break. But like I said, I'm willing to take it up towards 2,500 to 2,550 as like my stop area. But overall, I'm targeting 120 and 117. I'm just looking at trying to build small, add to my winning trades with sell stop trades. And once we get to 120 or lower, it's all profit. It's all protecting, making sure everything is risk free.
So that leads me to another question on a little bit of a selfish note here. So I don't have any position right now in the euro dollar, but I do have positions in the Aussie dollar. In your guys' opinion, from what I'm seeing, the Aussie is starting to show some weakness, but it doesn't look as good as the euro dollar does. What is your guys' opinion in comparison on if I want to position a bearish position against the dollar? It sounds as if, and I'm starting to convince myself of this too, it sounds as if the euro is going to be a better place to position than the Aussie dollar. Even though the Aussie dollar could see a sell-off too, just technically speaking, it seems as if the euro's going to be poised for a better push. What are you guys' opinion on that?
Let me say this. And I've had this question in the trading room quite a few times, Tyson, and it's a valid question. And so what I do is I always look at it and say, hey, listen here, what is the potential that the Aussie has to reach? How much room do we have for the Aussie to move before it gets to that target? And we're normally looking at, when we complete the 5th wave, we're looking for price to move to the 4th wave, so we can identify what that range is going to be. How much pips is that? So we take the Aussie, we take the euro, and we look at the ranges. Then what we do is when the ranges are pretty close and we got the same sort of, let's say we've both got 800 pips that the market can chase to. Then what we do is we actually take a look and see exactly where each pair is trading with inside the inside swings. I just did this on the euro right here. Take a look right here. You can see that the euro has just completed a 3rd wave, so which means we're coming up to a retracement. So what's going to happen is we're going to have a move from the probably around about the 382 right here, and it's going to go down to the 5th wave right here. Now this is the 1 hour inside swing, which means that we've got about 137 pips. Then it's going to rally back up again, and then it's going to go up another about 130 pips before it goes ahead and starts creating a larger swing to the downside. So the euro US dollar right now, positioning right now, probably some short-term gains on this one. Because if you didn't get up here at the top, if you didn't place a stop right here at the top, then getting in right here, you got to take some short-term profits because you don't want to be in the money and then the market goes ahead and rallies back up and stops you out, and then you're just really trying to make up what you lost before, right? So if you don't have your stops right up here, then you've got to start taking early profits on this. Now, if I go to the Aussie, and I'm going to try and give you a short answer to your question here, but if you go to the Aussie right here, and I look at the wave structure on the Aussie, now it looks a little bit different because now the Aussie's gone ahead and created this wave 1. We've gone ahead and created wave 3. We've come down here and created wave 5. So which means that we're either in a extended wave 3 or the market's actually going to go ahead and retrace back now into deeper retracement on the Aussie, and then we're going to see a much bigger swing structure on the Aussie. So I would say that reinvesting in the Aussie right now might give you bigger potential profits and longer runs than the Euro US dollar would do, because the Euro US dollar is going to be in a choppy mode because it's going to hit the it's going to be in about 150 pip downside move after its retracement. Then it's going to come back up 150 pips. Then it's going to go back down again, and that will be the biggest move. So it's all about timing. Timing right now.
And actually, now that you say that, I looked at the Euro Aussie and looking at just the Euro Aussie in itself, I like I have a hard time wanting to sell the Euro Aussie, if I'm being honest. And so therefore, I would rather be short the Aussie versus the dollar. I think both are good, but just looking at the Euro Aussie as kind of the hedge and said, okay. So I agree with you. I think you're going to be good hiding out in both spots longer term or over the course of the next week or two. But I'm going to probably stick with my Aussie. And if I'm wrong, I'm going to blame you, Gary.
I'll take it. I've got big shoulders. I've got 2 kids, man, and they're 25 and 24. So I got a lot of weight on my shoulders. No, the thing is this, dude. Both of those currency pairs, I see them as a great opportunity, but I think it's important that traders understand. That's why they need to get into our trading rooms, right? So they can get into the mind of Tyson, get into the mind of Chris, and understand exactly why they do what they do. And the same thing for me, because timing is so important with these pairs. There's opportunity. Now, not just timing, but of course, what strategy you're going to use on these particular pairs. Like the Euro US dollar, short-term profits are good right now. On the Aussie US dollar, if you're getting in on Aussie US dollar, timing is important to get in the Aussie dollar because there's bigger opportunities right now for the Aussie US dollar than there would be on the Euro US dollar at this point in time. But that doesn't mean that a couple of weeks from now that the Euro US dollar might not offer better opportunities than the Aussie, because the Aussie might be in a different corrective wave. So it is about timing. It's about positioning yourself on each pair, because even though we've seen dollar weakness, it's also traded against another currency, and that currency may be differently moving or have different fluctuations that may influence the actual direction the market's going to move based on strength and weaknesses. So that's cool. Let's move on to something now where, as we go ahead and end off the session right here, I want to get Tyson's view on stocks at the moment right now. Tyson, what have you got? What do you want to share with the students right now as to what they should be paying attention to when it comes to stocks? Keeping in mind what's coming up over the next week, the inauguration, the Trump impeachment, all of the stuff that's happening right now in politics right now. What do you think we should be paying attention to with regard to stocks?
Yeah, so it's a very interesting time, and I think the next 2 weeks could be free markets, because I guess businesses are able to do whatever they want, right? So I can't.
Sorry, Tyson, just give me 1 sec. Can you start again? Because for some reason we had a complete blackout and you were not on screen. So go ahead and start again. What you were saying?
Yeah, I was just saying it's a very interesting time, and I think the next 2 weeks could be some of the most interesting times we've seen, and that's crazy to say because we've obviously come through crazy times. But we're getting a lot of rumors and a lot of things that are happening, and you've got one side saying, "No, we're going to impeach." You got another side saying, "No, we don't accept results." We've got businesses, Twitter and Facebook, and all them, banning the president and all this kind of stuff. And so it's a battle between, free speech and free markets and all this kind of stuff. And So very interesting stuff happening. And no matter what side you're on, I think what we can all agree on is that volatility, it's here and it's going to stay. And I think right now what I'm doing is I'm looking for good opportunities, stocks that I like long-term, a stock like Fisker. Been on the bandwagon for Fisker for a while. I posted a chart, a couple charts in Smart Trader over the weekend on how I'm looking to buy Fisker, but I'm looking to buy Fisker at like 11% lower than what it currently is. And I'm going to use options to do that. And there's ways that I can do that. So I like trades like that. But what I also like over the course of the next 2 weeks is I like taking, and some people could look at this as like taking a conservative side, or maybe even some could say, well, wait a minute, that's not conservative, that's aggressive. I went out today and I went out to February, the end of February, and I started to buy puts, downside bet, bearish bet on the S&P 500 at 379. I paid about $10 for those puts. And what I'm doing, guys, is I'm not looking at this as like, oh, man, I think the world's going to hell in a handbasket and all this, and I'm looking for this massive move down. What I'm really doing is I've got a net long position in stocks like Fisker and stocks like Skills, different things like that. But I want to protect my portfolio. So if this craziness ensues, that could potentially happen with all these rumors going on over the next 2 weeks, I don't want to just sit there and lose money. I want to protect my downside. So I'm using it as a way to, if the market tanks down, those puts will pay off nicely. My stocks will go down too, but I'll kind of have that hedge. And so what I plan on doing is, if I profit from the puts, I'll take that money and buy back more stocks. If the puts don't pay off, then you know what? I'm fine, and I'm still making a decent amount of money in my stock. So I'm looking for ways to protect my portfolio in the stocks that I'm in right now. I do not think that this is the time to go like gangbusters and go long the stock market. I think you should learn how to use options to buy high-quality stocks at cheaper prices. Maybe someday Chris and I might be able to teach you guys about that. Hint, hint. We'll see if that happens. We got a lot of exciting things happening, but right now it's about protecting your profits, protecting your portfolios. And if you can, maybe take some shots on the downside, but don't look to it is a loser's game to try to get rich on a market crash. Guys, I have bought speculation puts before, and I've lost a tremendous amount of money thinking I'm going to time that next crash. I'm not trying to time the next crash. Even though I think we could see a decent amount of sell-off in the next 2 weeks, I'm just essentially looking to protect my portfolio. And if I make some money on the downside, great. I'll take that money and buy some of the high-quality stocks that I like.
All right. Fantastic. Well, good. All right, guys. Well, I appreciate everyone. Appreciate you, Chris, your time and Tyson's time today. We've pretty much run up our time for today. We will be back again on Monday. For those that enjoyed the content that we spoke about today, please go ahead and do me a favor and smash, is that a hate crime? No, maybe. Smash the like button. And please go ahead and make sure that you share the video out to all your friends. We definitely want to get the message out there. We do appreciate everyone. Thanks for coming in. Hope you guys enjoyed the conversation today. And we're definitely going to have some deep conversation next week as we go into the final U.S. election, let's call it process, as we're heading into the inauguration. So with that being said, have a great week of trading. Make sure you get into the trading rooms. We'll see you in the trading rooms, guys. Thank you. Bye-bye.